Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the Chicago Board of Trade. Today is Monday, January 5th. We are officially back in the saddle. I would have been doing some video updates for you, but I am not very tech savvy when it comes to clipping and editing media clips. Luckily, Julie is back in the saddle as well, so she's here to help with that going forward. Now, today, the second day of the trading year, certainly felt like the first. Last week, a little bit wonky, and the week prior to that, a little bit wonky. It's always tough when you have a holiday. You have one trading day and then the weekend. Not a whole lot to read into in terms of price action. So I think last Friday's price action had a big asterisk next to it. And I think today's price action to start this week's trade certainly confirms that. As you can see here, we had the weakness last Friday, and then today just bounced right back. We got more participation, and we got back above some very, very key levels. But I think more importantly, we were able to defend a significant support pocket down here from 434 to 436. That's a level that we've outlined in our Morning Express, Grain Express over the last couple weeks. The ability to hold that is encouraging. Today's price action back higher. Just as encouraging, and right back to those major moving averages. We got the 20, the purple line, the 50, the red line, and the yellow, which is the 200-day. So basically, right smack dab in the middle of an inflection point here. If we can get out above the 200-day moving average, which is also basically the middle of this trading range, near 445, I think that opens the upside potential for a retest of the upper end of the recent range, which comes in about 452, 455, give or take. What's going to be the catalyst to get us out above there? I think it would probably have to be something with regards to weather in South America, maybe kicking in a little bit of premium. Right now, exports have been the main driver in keeping a floor in the market, but it hasn't really been enough to accelerate and break the market out to the upside. Potentially that changes in a new year, but for now, it's just wait and see if we can't get out of this trading range. We do have a WASD report next week, so be prepared for that as well. Maybe some positioning into that as we start the new year. Now, over on the soybean side of things, similar type of deal on Friday. You had almost like a false breakdown. It was a real breakdown, certainly on the back of the weaker price action over the last month or so. But we had a big move lower early on and then closed about 10 cents off those lows, basically near unchanged. So, again, Friday session, just take it with a grain of salt today. You get a little bit more participation. You get a lot more people in the offices, the trading desks, the trading rooms. Everybody's back in the saddle and looking forward to start a new full week and a full year of trading. So lots of opportunity. Obviously, today kind of negated some of that weakness that we saw. We got back above what was trendline support that broke down at the end of last week. We do have a little bit of a headwind ahead of us at that 200-day moving average. That comes in at 1066. Again, this is for the March contract. If we can get out above there, I really wouldn't be surprised to see the market retest that mid-1080 level. And if you recall, the mid-1080 level had been a big inflection point for the market, not just here recently on the way down, but you go all the way back to the spring before that, really February. You've got June through the summer and then the eventual breakout point. So if we can continue to hold our ground here and get some footing, I think a retest to this inflection point could be in order. Whether or not we're able to get out above there, I think to be determined, as we talked about in our interview with RFD TV earlier this morning. I think if anybody's learned anything over the last couple months is that producers probably want to be a little bit more proactive if they get bigger rallies in this soybean market. That's not to say we can't get back to those old highs. I think it would probably take something special to do that, but certainly not out of the question with a lot of uncertainty in the new year ahead. Now, over to the wheat market. Nice strong day, certainly encouraging. This has been kind of a technical graveyard, I guess you could say, in the wheat market. Every time you think that we're going to post a low, or at least a short-term low, it gets sold into, and that has been the trend. But we've got a little bit of a double bottom forming here, and this also kind of coincides with this old low down here. We're still a little bit below that, but all in all, it seems like the selling pressure is subsiding some. It just doesn't feel like the selling pressure that you'd seen previously. So it looks like the it might be a little bit overdone here in the short term. What the bulls really want to see, though, is not just the strong price action here. We want to see some strength, right? We want to get back above where we broke down from here in the middle of December. That's going to be the mid 520s to the low 530s. If we can get out above there with some conviction, I think that's what would maybe reignite some technical optimism, and we can make a push higher towards the upper end of those ranges from November and that 200-day moving average at 563. So positive price action, good to see, but I think a lot of people, especially if they've been trying to play it from the long side over the last several months, are wanting to see more confirmation, not just a one-day thing. I tell clients all the time, sometimes it's better to be a buyer on strength than to pick a bottom. So that's what we're looking at for the wheat market. Constructive day, certainly quite a bit more work to be done on that front. Now, over on the cattle side, it's been quiet, basically through the back half of December. That's something we had kind of talked about expecting. The ranges subsiding, the 14-day average true range just collapsing, volatility collapsing, and then Friday we got the big move higher. Unlike the livestock markets, the cattle market was able to kind of retain a lot of that strength, so the cash market is still kind of doing its job. Now, if you are a producer, a livestock producer, I think this is probably a good opportunity to look at some sort of downside protection. If you want to keep your upside open, options could be a great way to look at that protection. Again, not an outright recommendation. Everybody's a little bit different. Everybody's got a different setup and different risk appetite and risk parameters. So something to consider. If you have questions over how to approach that, don't hesitate to reach out to our trade desk. We are always ready, willing, and able to help. I think the same can be said with the feeder cattle market. Obviously, the breakout, big move higher on Friday, a little bit of follow through in today's trade. I still feel like this is probably a pretty good level to lock in some sort of risk parameters here if you've got the physical exposure, and especially if you sat through this whole big wave down, you said, man, if only I had got something done at 350, 360, well, here's your chance. There's certainly ways to do that while keeping the upside open. Again, our trade desk is always here to help on that front. Jumping over to the lean hogs, this has been an exciting one recently. We had the big move higher, consolidated, and then a bit of a breakout move today. That is very technically constructive. I really like the upside in lean hogs. I really wouldn't be surprised to see this momentum continue to take us back towards that 94.75, 95 level, and then looking a little bit further out, talking with clients positioning in the June contract, we think there might be some opportunity for that market to continue higher as well. So all in all, livestock, a great start to the year. We'll see if we can't keep the momentum going on that front. And then lastly, I just wanted to touch on the crude oil market. Obviously, we got the big news out of Venezuela over the weekend. A lot of people were expecting crude oil to be sharply lower, and I get why people would just jump to that conclusion. However, I don't think the infrastructure is in place, and I wouldn't have been surprised to see crude oil lower, but I think the fact that crude oil is able to shrug off the news and close positive and rally today, I think that speaks volumes for this market. If you're a believer in the commodity super cycle as well, with what we've seen in the precious metals, crude oil could potentially be the next shoe to drop. So I think crude oil, some good opportunity potentially here with today's price action to start the year. If we can get out above trendline resistance, that comes in basically right where we're at today, 58, 50, 59 bucks. I think we could continue to see this market gain some technical momentum and certainly get some momentum traders on board. So that's what we're looking at, not just to start the week, but to start the year. If you've got any questions at all, don't hesitate to reach out. We are, again, ready, willing, and able to help. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.